Good morning, everybody. This is the Live Market Open for Monday, November 16th. I hope everybody had a good weekend. I'm Yohay, Elam of Forex Crunch and Market Movers podcast, doing the show for FX Street, as usual, as every morning. And we'll cover, of course, today the recent developments in markets and, well, unfortunately, not only markets, charts and levels in the next 24 hours. And, of course, looking forward to your questions. If you can't see the chat below, go to tlk.io/fxstreet-forex-live-video. They'll be glad to listen to hear your questions and provide some answers. So, what's dominating the news, of course, since Friday night here in Europe is the attacks in Paris. So we had multiple attacks in the French capital. 129 people are known to be killed at this moment. 99 critically injured, lots more other people injured. Were attacks by the ISIS, Islamic State, following events in Syria and Iraq. We won't get too much into that. We're talking here about markets, but it's just a very tragic event. French security is tightened, borders are closed. There's still a manhunt for some suspects. France has also made some airstrikes in Syria, and everything regarding the policies in Syria, refugees, everything is questioned. We did have reaction in markets in terms of risk aversion. So let's look a bit at the charts and how we saw the opening. So let's look at dollar yen. As always, in times of trouble, we have a reaction from the yen. The yen is strengthening. It's a safe haven currency. So we've seen a gap lower, a stronger yen against the US dollar. Since then, we closed the gap. So it's not such, as usual, there is some worry in markets and then it calms down. The immediate, the economic impact is still to be seen. Of course, during the weekend, we had perhaps less people shopping in Paris and people are more watching TV, but probably won't have a big economic impact, especially on the franc and the euro, which is a currency for all the European, for the Eurozone for 19 countries. For Japanese yen, which enjoys safe haven flows, we're seeing this gap closed. For the franc, we've seen also stronger Swiss franc, as the franc is also a safe haven currency, but the gap is almost closed there. Nothing really big on euro Swiss. On dollar Swiss, I think we also had, no, here we had very little reaction. This Japanese yen is the number one safe haven currency. The rest are behind. So the euro also is sometimes seen as a safe haven currency. Since the summer, it's not really a safe haven, but more something like, I would say, because it's a funding currency, because we have a negative deposit rate in the Eurozone, because we have also the ECB's money printing machine, then the euro, when we have risk on atmosphere in markets, we have people taking loans in euros and spending it elsewhere. When we have trouble, money goes back into the Eurozone, even if this same kind of trouble comes from the Eurozone, okay? So we don't see any real reaction on euro dollar. So we did see the pair gap lower, fall, and now it's closed the gap. I see it as, all in all, as range trading, a continuation. So we had a minor reaction to the Paris attacks, but nothing real, because after a few hours, the gap is closed and the pair is back in range, okay? So that's what the tragic news over the weekend. The political news will, of course, continue accompanying us, and we might see implications for policy regarding refugees, policy regarding Syria, perhaps, unfortunately, we might have more terror attacks. Anyway, but regarding markets, the effect is quite limited, okay? So let's see what else we had during the weekend and on Friday, of course, before the weekend. We had Eurozone GDP miss. We had it come out at 0.3% quarter over quarter, less than expected. This came after Germany and France also reported the same growth rate, which was more or less within expectations. But anyway, quarter over quarter, we had 0.3 instead of 0.4. Year over year, it's 1.6 instead of 1.7 expected, but better than 1.5. So it's not a huge disappointment. The Eurozone continues growing, but it's not as good as people had expected, okay? On Friday, we didn't see a really strong impact on that. When we had the GDP figures released in the Eurozone, we had sort of more of the same. Then we had figures in the United States. Very important retail sales were released. They came out worse than expected as well. Headline retail sales rose by only 0.1%. But the control group, there was also a small miss, but not terrible. So it wasn't. So if you exclude gasoline, auto sales, food, more volatile things, it wasn't that bad. Okay, so because we had a long streak of bad figures in retail sales from the US, it wasn't, well, we had it not too bad. It was a miss, but not terrible, so it didn't have a strong impact. And then an hour and a half later, we had the consumer sentiment figure. Okay, so we had consumer sentiment coming out better than expected, 93 points, and that sort of stabilized the weak retail sales. Retail sales is a figure for October and consumer sentiment fresh for November. And as you know, in November, we have the sales season starting. We have Black Friday towards the end of the month around Thanksgiving, and then Christmas shopping is basically already underway. So even if there's not such a good correlation between actual retail sales and consumer sentiment, this sort of was the last figure before the weekend and before the terrible news from Paris. So it was sort of more positive for markets. Okay, so we had after the weekend we had Japan, news from Japan. Japan entered a recession. It wasn't a surprise. It was a bit worse than expected, but there's a silver lining here. So in Japan we had the economy squeezed by 0.2%. One silver lining is that last quarter in Q2 it squeezed also by 0.2 and not by 0.3 as it was originally reported. And another silver lining is that the deflator was bigger than expected. So we had the economy in Japan growing by, in nominal terms, it didn't squeeze. It was 0%, okay? If you look at real terms at the deflator, if you consider inflation, we had it fall. But as we know, the Bank of Japan is focused only on inflation. If we have the deflator rising 2% year over year, in nominal GDP is flat and not squeezing, it's not such bad news. That's why I think that, first of all, we might have, of course, this is a preliminary figure and we might have an improved figure later on. But more importantly, for the Bank of Japan, it's not that bad. Okay, so we have nominal GDP actually flat, not squeezing. What we might see perhaps is some stimulus from the government, but probably not from the Bank of Japan. The Bank of Japan had its opportunity to act on October 30th, and for those of you following the show, of course, we talked about that. Will they, won't they, will they, won't they during October? They didn't act. They had their semi-annual report and they didn't act. They have another rate decision this week. I believe they will not act, not this week and not in the following weeks. So while we had it, Japan is again in recession. That's the headline. The economy squeezed in Q2 and Q3. For the Bank of Japan, the news isn't as terrible as the headline suggests. Okay, so that's what we had from Japan. In Japan, we talked about the Japanese yen. We had it, of course, falling because, strengthening mostly because of the Paris attacks, because of the risk aversion. Okay. More news. We have a WTI crude oil continuing its slump, reaching on Friday the $40 handle. Let's look at it now. Still in low ground, a bit recovering, but as you can see, there is a big slump in oil prices. It's currently 40.84. We were at lower levels on Friday, so a bit of stabilization there above the round number of 40. But in general, just too much oil flowing in markets. Okay. And another event we had came from New Zealand. We had retail sales coming out mixed, better I think on the core. Yeah, better on the core. This is the FX Street Calendar and Forex Crunch. So it came out 1% on the core and 1.6 on the headline, more or less sort of mixed figures. So we didn't have any real reaction in the Kiwi dollar, okay? Right here, still within the range, 65.30, between 65 and 65.70. Let's look at a bit currency charts before we move to the next events of the day. We have Draghi once again today, but let's talk about him later on. So we have euro dollar in range. We have weak support at 107.05, sorry, stronger support at 106.60, resistance 107.90 and 108.30. We had a rise to 108.30 last week towards the end of the week. This is a very clear separator of ranges. This is where the pair fell to support before the non-farm payrolls and then rose to resistance last week. Okay, so 108.30 is critical resistance. Support, critical support 106.60. Pound dollar. Why do we have these technical glitches? Anyway, we're all right. Pound dollar 152. This is sort of a pivotal line within the range. 150, 150 is support. 152.50 is weak resistance. High resistance 153, 153.70. Support 151.15 and then 150.50. Nothing from the UK today. Talked about Japanese yen. Okay, we had it fall, starting a gap lower because of risk aversion. Stronger Japanese yen, safe haven flows. Now moving back to the previous range, 152.75. Strong resistance is at 123.60. The post NFP high and support at 122. At no stage did we reach 122, and I think it shows that the pair is well bid. Lots of support for dollar yen. Okay, dollar CAD weaker. Dollar CAD is weaker than we had it on Friday. But oil prices, if we have another slide in oil prices, we could see the pair fall. The critical level is, of course, 134.60, which was the 11-year high. Currently, we're around 133, a pivotal line, and more further support at 132.40 and 132. Okay, and the Australian dollar within the range. We had a jump higher last week because of strong employment figures in Australia and stabilizing around 71.10. Further resistance at 72, support at 70.65. New Zealand dollar we already talked about, within the range right here. Let's talk about further events today. So at 10 GMT, 11 here in the old continent, we have final GDP figures from, final CPI figures from the Eurozone. We have, we're expecting more of the same. These are final figures for October. We're expecting 0.1 month over month, and year over year, we're expecting flat 0%. Okay, more or less what we've seen in the past. That's, of course, because of oil prices. Now, with the core inflation, we had 1% in the preliminary read, and now we're expecting more of the same. If you look closely at core inflation, we've already seen it at lower levels this year, around 0.5, 0.6, and climbing gradually towards 1%. Okay, but Draghi spoke last week, the president of the ECB, and he said that the strengthening in core inflation is beginning to weaken, and that's because of oil prices. So if in the United States we have oil prices seen as transitory, as having a temporary impact on inflation in the UK, in the United States, in Europe, Draghi said that it's beginning to have a bigger impact, beginning to reach core inflation as well. Okay, so that's worrying. And in this specific context, just 1 hour after these figures, not 1 hour, let me look back at the charts, I think only 15 minutes after we have, look here in the calendar, just 15 minutes after we have the inflation report from the Eurozone. We have Mario Draghi speaking again. This time he'll be here in Madrid, here in Spain. I'm sitting in Barcelona, and let's hear if core inflation really comes out weaker than expected. If it doesn't confirm the 1%, remember it's the final figure for October. And and we have, let's see, first of all, if the figures come right, and secondly, what he says in general about core inflation, economic growth, and what the ECB, of course, does in December. Okay. What else do we have today in terms of big figures for those of you trading the Canadian dollar? Today. It's not only about oil. We have manufacturing sales in Canada, and these are expected to. Well, we don't have expectations here. We had the last time they fell 0.2%. They're expected to rise 0.1% this time. Okay. And we also have foreign investment in Canada and other things. For the United States, we have the preliminary or the very early figure for November for the New York Empire State Manufacturing Index. Last time it was terrible, minus 11.36. This time we're expecting it to rise but still remain in negative territory. So if you look at the last few months, we had it at negative ground. Manufacturing in the United States is the weaker link in the economy, so it's expected to remain negative. Anyway, it's important for the manufacturing sector, but manufacturing is small in the United States, so it's sort of a second tier figure and not a really important one. So these are the events we have today. For tomorrow, early tomorrow, we have the RBA meeting minutes at midnight in Australia. Let's see if we have something new. Usually, the meeting minutes from the RBA, as well as most I won't say most. When we have meeting minutes in the UK and in the US, they have a huge impact, okay? But when they come from the Eurozone, Australia, New Zealand, they don't really have a big impact. For those of you trading the Q, we have New Zealand inflation expectations, because we have inflation figures released only once per quarter in New Zealand. When we have inflation expectations, it's sort of a complementary figure. We had them slide from the highs in recent years. They were above 2% and now they're below. Let's see if they remain on low ground. Okay, these are the events for the next 24 hours. Looking forward to your questions. I see here Jax are Wild, Vishai, and Jajais, quite a few people in the room. Looking forward to your questions. Okay. And first day of the week, of course, we had bad news from Paris, which still has an impact, and not so many big releases. So perhaps we'll cover a few events coming up later in the week. Okay. So today we had Japanese GDP, which came out below expectations. And Japan is officially in a recession, but we had some silver linings. Good morning, Fabian. Had excellent questions from you on Friday and Thursday. Looking forward to more questions. Today we also have Mario Draghi speaking. Let's see if he moves markets. Euro dollar is currently well within the range, I would say, stuck in the range. Hopefully we'll have some explosion and bigger explosion than we had last week. Now 107.43. Tomorrow we have quite a few. Tomorrow is already getting much busier. Okay, so tomorrow we have UK inflation data. I'm sure it'll rock the pound because the Bank of England was worried about inflation. Inflation in the UK is the weaker link. All the other figures in the UK look good. Good evening to you, JJ in Australia. Tuesday we also have inflation data from the United States. It's in the United States. It's not as important as in Europe or the UK, because the Fed also has the employment mandate, not only inflation, but it does matter, of course, core inflation. If we have it move from 1.9% than we had last month, that'll of course move markets. If it rises to the magic 2 number, it's good news. And if we have it under 1.9, it's bad news. Good afternoon to you, Vishai. And we have milk prices also in New Zealand, which is of course important for the Kiwi. On Wednesday, we don't have too many events on Wednesday, but we have one really big one. Actually, the main event for the week comes on Wednesday. That's the meeting minutes for from the United States, the FOMC meeting minutes. Let's talk a bit, as we have a bit more time today. Let's talk a bit about that. We have last time in October, the Fed was relatively hawkish. Okay, they were relatively upbeat about inflation. They said, okay, inflation is weaker now, but in the long term, it's going to rise. Employment perhaps is advancing not so fast as it did beforehand, but in general, we have some progress there. Okay, and they also said most importantly that when considering the aspects for a rate hike in the next meeting, they will consider quite a few factors. When they mentioned these words, next meeting, that's what really ticked markets. That means they gave us a thick hint about action in December that strengthened the US dollar. Now, the meeting minutes, they might reveal more stuff about December. We had, since then, we had a strong NFP figure, very nice growth in jobs. Let's see if it has an impact. So expectations might be a bit high. We'll talk about that more on Wednesday, of course. Expectations will be high for, we had a hawkish October meeting, and these are the minutes from that meeting, and we had since then strong figures. And as we know, they revise, they edit, they sort of micromanage the meeting minutes until the last moment. So expectations will be high. Let's see if they give us another hint for a rate hike in October. That's the main event for the week. Usually the language of the meeting minutes is quite boring, but they do have, it does move markets. Okay, so that's the main event of the week. I'm showing you now the FedWatch tool from the CME group. It shows us the implied probability for a rate hike, and it shows us nearly 70%. It's around what we had last week. At some point on Friday after the week retail sales, it fell to around 65%, but since then it went back up. So retail sales was disappointing, but only temporary. Okay, I see here a few questions from Fabian. First, euro dollar rally to 107.15 and pause. Do you think it will keep on rallying today, or just made a lower high? Can it go up to 108 again? Well, first of all, 108 is still within the range. To answer the last part of your question, I would mark here, because of what we had last week, 107.80, 107.90 as weak support. Weak resistance, and then 108.30. So a rise to 108 is not such a big deal in my opinion, but I don't see it rallying. I do see it as a lower high, as a potential for a fall, because we might hear from Draghi talking about action in December. Remember, we're only 2.5 weeks away. The decision is on December 3rd. So December 3rd, that's, let's look at the calendar. That's a Thursday, 2.5 weeks from now. And GMT, official expectations stand at 1%, but we might have it lower. And so I believe it's a lower high, and we could see it fall. 107.05 is weak support, then we have it at 106.60. So if Draghi is really dovish today, we could fall below 106.60. I'm not sure he'll be extremely dovish, just a bit, but I see my bias is bearish on euro dollar. A question from Jax. You think dollar is being forced, so the Fed has to act? The economic data from Friday strengthened the dollar. The Fed wants to act because of a few things. First, they don't want to be blamed once again for creating another bubble. So we have money from the Fed for QE money, helping the US economy, but just a bit. It also lots for economic reasons. We don't have real inflation in the United States, but we have some signs of wages rising. So first of all, we have GDP growth, then we have employment rising, and eventually, when wages rise as well, we have inflation. So they want to be ahead of the curve. Janet Yellen said a few times they don't need to see inflation rising before they act. Other members said this and also said other things, so it's not a clear cut, but I think they want to get over with the first rate hike and to make it clear that it'll be very gradual, the next moves, okay, in 2016. They want to remove uncertainty and then send the message, the next moves will be very, very slow, okay? I don't think the Fed is forced. Markets would prefer less uncertainty, and earlier they would prefer no rate hike, but now they're getting used to the idea because of all the Fed preparation. We had quite a lot of that, okay? Looking forward to more questions, and the week doesn't end on the Fed minutes on Wednesday. We have on Thursday Japan rate decision as the main event of the day. They might react to the recession figures, but I'm not sure. They might react in words, but not in action. And on Friday, Draghi speaks again. Of course, these are the main events. We also have a few more events coming up. Yeah. Oh, I didn't answer your question, Jax, about economic data from Friday strengthened the dollar. Well, first of all, retail sales was a miss, but we already had misses on retail sales in the past. So the market, I think, was in a tin hat mode. And another thing we had is that the control group was not as bad as earlier perceived, and that consumer sentiment, which is for November, implied a better shopping season. So we had weak retail sales for October, but expectations for better retail sales in November. Okay. All in all, we had sort of mixed markets, weaker dollar initially, but then stabilizing. Okay. Let's look at other charts. Mentioned dollar Swiss. Now it's at 10062. Parity is, of course, some kind of support. 10085, despite the breach we've seen on Friday, still some kind of resistance. Remember that the Swiss National Bank is intervening. If we do have action from the central bank in Europe, from the European Central Bank in December, I believe we'll see much more intervention, because the Swiss authorities care a lot about the Swiss franc against the euro. This exchange rate, very, very stable, as you see, support 107.60, resistance 108.40, around 108 at the moment, very, very stable. Okay, question from Fabian. Today, Draghi will speak to entrepreneurs. That's right, in Madrid. Due to the fact that the business community is worried about Paris attack effects on the European economy, is it possible that Draghi will talk them up, encouraging about the positive aspects of the European economy, and therefore, as a side effect, push the euro up for today? Well, very, very good question. Yeah, you would want to encourage the business community. He wants more investment, of course, because that would really push inflation higher. And I think, but one of the ways he can boost confidence in the Eurozone is by saying that the ECB has the back of the business community. Okay, that means that the ECB will continue buying bonds as much as necessary, as long as necessary. So it might be good for stock markets, good for investment, and weaker euro. So I'm not sure the side effect will be a stronger euro. The side effect may be a weaker euro, but stronger stock markets in Madrid and also in other places. Okay, so, and of course he'll call on governments to do more for the business community. The ECB usually has this line of more structural reforms needed and things like that. Okay, so Draghi he speaks in front of entrepreneurs. He'll talk about Paris, of course, some kind of mention, and then basically provide backing for the business community, and that might be positive stocks, negative euro. Okay. Another question from JJ. Kiwi dairy prices should be interesting this week for Kiwi crosses. Certainly so. Every 2 weeks we have this auction. In the last two ones we had a fall. Let's look at the numbers. We had, where's the GDT number? I can't see it here. It's weird. Anyway, we had two falls. We had a fall of 3% and then a fall of over 7%. We don't have expectations for this specific meeting. Anyway, it'll be interesting for Kiwi crosses, as you said. When we get closer to the event, we'll talk about that. It's on Tuesday. Don't know why I can't find it on the chart. On the calendar. Oh, it's right here. I wasn't looking good. Okay. So we had 4 consecutive rises. 1, 2, 3, 4. Then we had 2 consecutive falls. In the past, we had 10 consecutive falls. This is a very, very volatile figure, and it moves despite this volatility, despite these crazy moves up and down, it does have an impact on currencies. Okay. Any more questions? And in the meantime, we'll cover more currency pairs. Euro pound monetary policy divergence, the name of the game. Now we're seeing euro strengthening, so euro pound is moving a bit higher, but all in all, we had a challenge here of support. This is support because 70.25 on the pair, because it was support late August. Okay, so very nice that this cross remembers this line. Okay, yeah, last time it was 7.4 negative, a fall in Kiwi prices. So we're seeing back to euro pound, we're seeing it exactly at support. Let's see if it forms into a double bottom or it's just a temporary test of this line, and then we'll see it break lower. In general, euro pound, I see it falling because of monetary policy divergence. In the UK, the Bank of England is expected to raise rates at some point after the Fed, and in the Eurozone in 2.5 weeks, we're expecting more monetary stimulus. At the moment, expectations stand on a kind of stimulus is cutting the negative deposit rates to even more negative ground, and not more QE, but who knows? We'll have lots of speculation in the weeks to come. Euro yen falling because of the risk aversion, because safe haven flows following the Paris attacks, strengthening the yen, falling temporarily below the support line. We see 1, 2, 3, very, very strong support here at 131.50. We've seen a dip below this line all the way to 130.65. I believe this is a false break. We're seeing it back in range in the very illiquid hours of Monday morning because of these attacks. I don't think we'll. I think we'll see it back to range, which is we're seeing it already back to range. I think we'll stay in range 131.50 to 133.15. Before we move to the next pairs, we have a question: what pairs to watch today? Euro, because of Draghi speech and core CPI. These come 1 hour after the show ends, a bit more, at 10 GMT and then 10:15. This is, of course, an important event in euro dollar because we have figures from the United States. Another pair to watch is dollar CAD because of Canadian manufacturing sales and because oil prices remain pressured. Let's see if we have some kind of bounce in oil prices after all these falls. Let's take a look at oil. Yeah, currently it's a bit higher, but only marginally. Support at the round 40 level, resistance 42.50, which was a double bottom right here. Yeah, or not double bottom, but it was support. Anyway, so these are the main pairs to watch. Tomorrow it's some of the focus shifts to the pound, but today it's next moves are in, I believe, in the euro dollar, and of course in the Canadian dollar. Okay. More currency pairs. Let's talk about pound yen. Risk aversion pushed the pair below this level, just under 185, 186. Now we're back in range. This was a knee-jerk reaction on illiquid markets, stronger Japanese yen. 188.12 is the high level, or 188.10 is the very strong resistance line on the top side. On the bottom, we have 184.50 as strong support. I see the pairs continuing the upward move because the knee-jerk reaction in Japan was unjustified, and in the UK, a rate hike is expected. Okay? Any more questions? Aussie against the Kiwi, very nice technical behavior. You can see this line here, 108.60 as a separator of ranges. Okay, if you want some technical looks. The price of gold, it broke below support here at 1100, the round number, failing to recover so far, attempting to recover and stopping at resistance. Support appears at 1070, very much in range. I don't know how many of you are trading gold. Anyway, it's falling because well, stronger US dollar, expectations for rate hike in the United States, less monetary stimulus. And so that's what's going on over there. Yeah, any questions? Towards Draghi's speech today in Madrid, I have here this slide about his previous speech. Right here. No. Too many slides floating around. Maybe I don't have it anymore. Yes, I do. So this is a slide from the rate decision on October 22nd, and we're already almost a month from there, but his stance, he repeated his stance last week, okay? So basically, an open door to extending QE beyond September 2016, that's when the program is expected to end officially. Opening the door to expanding QE beyond 60 billion per month, that's the money the ECB spends, creates money out of thin air to buy European bonds. Open door to cutting the deposit rate. And since then, we had more talk about cutting the deposit rate. Remember that in Denmark and Switzerland, the deposit rate is a negative 0.75, in the Eurozone only negative 0.2. So there's more room to cuts. Of course, there's always a limit to how deep you can cut, because at some point people will just stash money at home, because why put it in the bank if you're punished for that? So these are the three things that the ECB can do. And he also expressed worries about inflation, like he did also last week, that the fall in energy prices could also reach core inflation and sort of create this deflationary mindset. And he expressed worries about the exchange rate. So the exchange rate was relatively stable last week, but I believe they want to see it even lower. And what could be different today, perhaps than Thursday, is that we have the official GDP numbers, and we'll have, of course, the official inflation numbers, which are the final and not preliminary. And of course, use the word vigilance and that's a hint that action is imminent, that the ECB is indeed ready to act at the very next meeting, which is in December. Okay, any more questions? We'll get to the wrap up. Let's take a look. Very much in range. Since the beginning of the show, we had Euro-dollar fall just a bit from the highs of 107.57, we're 20 pips lower, very, very much within the range. Okay. So let's begin the wrap up for today. This is the wrap up for Monday, November 16th. For the live morning show, markets are still watching the news. Terrible news from Friday, from Paris on Friday. Terror attacks on the French capital, 129 killed. As we know so far, it has implications for strikes in Syria, refugee policies, lots of things. We had a reaction in markets. We had risk aversion impacting the safe haven yen first and foremost. We had this Japanese yen strengthening. We had it fall to dollar yen fall to 122.22. Since then, we're moving back to range. This was a knee-jerk reaction. Money flows to the safe haven funding currencies. But then when things stabilize, it has a smaller impact. For the euro, we also had some kind of weaker euro at the beginning, but the gap was easily closed. We're very much in range. Range is for the euro now 107.05 to 107.90, the narrow range. Wider range 108.30, which is very strong resistance. Separator of ranges, and on the top side, and the bottom side 106.60, which was support back in March. Okay, we have the big focus of the day is on the eurozone, and at least this morning, because we have final inflation figures from the eurozone at 10 GMT. Let's see if core inflation falls below 1% initially reported. That's because we had a hint from Draghi on core inflation back on Thursday. He was worried that oil prices could reach core inflation. The same Draghi, president of the ECB, speaks 15 minutes later in Madrid. He speaks in front of entrepreneurs. As Fabienne mentioned, he might encourage investment. He might, but also ask governments to help in that thing. And he might offer his support when we have the ECB supporting stock markets and investment. We have also weaker euro. Okay, more today we have manufacturing sales in Canada for those who are trading the Canadian dollar. The Canadian dollar weakened because of oil prices. So currently sort of hugging 133, support 132.40 and 132. 131. Only 131.60 and 132.40. Resistance 134.60, the 11-year high. Pound dollar hugging 152, resistance 152.50, and support 151.50. Talked about the yen. Resistance is at 123.60, support 122. Aussie dollar just above 71.10, not such a strong line anymore. 70.65 is support, 72 is resistance. Kiwi dollar very, very much in range. We had retail sales from New Zealand. They were quite mixed. They didn't have a real impact. 65 is support, 65.70 is resistance. Okay, let's talk about more events and coming up. In the United States, U.S. Empire State Manufacturing Index, that's a figure from November, so it's very fresh on one hand. On the other hand, it's not that important. And we have bigger events later this week. So let's see if it moves markets just a bit. Let's move back to events we had in the past on Friday, which were more important. We had retail sales miss in the United States, but the control group was okay. And also another silver lining came from consumer sentiment, which came out better than expected and sort of raised expectations for better retail sales in November, shopping season, Black Friday. Japan entered a recession. It was not unexpected. The economy squeezed by 0.2%. And in real terms, in nominal terms, it didn't squeeze at all. So it's not that bad. In addition, Q2 was revised to the upside. So we had 2 consecutive quarters of recession. We're not expecting action from the Bank of Japan. They had their chance to act and they didn't act, and things need to get a bit worse before they can act, because we had these sort of silver linings. Watch the price of oil. still low, and Eurozone GDP. It missed on Friday. Draghi might talk about that. It wasn't terrible, but it came out 0.3 instead of 0.4. So that's something to watch. The pairs to watch, answering the previous question, once again, a euro dollar because of Draghi and because of some figures from the US, and the Canadian dollar because of oil and figures from Canada. Okay, that's the wrap for today. We have time to answer another question from Alexei. Good morning. For a day trader, what do you think, what is better time frame when looking at Bollinger Bands in order to discover bullish or bearish in medium term, maximum 3 days? I must say I don't follow Bollinger Bands, so I can't really provide an answer. I look in general at the daily charts for the bigger picture, and for the hourly charts for more on the daily level. So try to keep it simple. Okay. Regarding Bollinger Bands, I don't have an answer. I'm sorry. Perhaps someone else here in the room uses Bollinger Bands, but anyway, I look at daily and hourly. Okay, so that answers your question. And yeah, that's our show for today. So I hope we won't have more bad news from the world like we had from Paris and previously the Russian plane and bombings in other places. And anyway, and I wish everybody a safe trading day, safe and successful. And we'll be here, of course, tomorrow, same time at 8 GMT. Good luck, everybody. Safe trading, and bye-bye.